Yes. What's going on? This is Ben, aka Day Trading Addict, and I have another good video for you guys. Today, we're going to talk about a Forex moving average trading strategy that really works. So make sure you hit that subscribe button. Make sure you hit that like button, because over here, what I do, I help struggling traders take their trading to the next level and help them become full-time traders. I have been trading these markets for 13 years, so this is a channel that you definitely want to follow. Okay, so let's get to the strategy. Now, me personally, I don't use no indicators. I like to use a plain chart. Sometimes I would throw on a moving average, and that's because, it's just a habit. But overall, guys, I don't use no indicators, strictly price action. And today, I'm going to show you guys how to use, these moving average, because I think some of you guys have, problems with looking at the trend and trying to figure out, okay, is this a downtrend, uptrend, or whatever the case is. So we're going to keep it simple. And you know me by now, okay? I don't believe that you can actually use an indicator by itself. So today, we're going to use price action combined with these moving averages. Okay, so let's get the party started. Today, we're going to use the 20 moving average, okay, and the 50 moving average. It could be the SMA or the EMA, but today we're going to use the regular SMA, simple moving average. So let's get the party started, okay? So let's go. Now, the first price action strategy we're going to use, guys, is just simple support and resistance. And we're going to look for price to come near the 20 moving average. And then we're going to look for trades around that moving average. Okay, so let's go. We have right here, okay, resistance, and resistance. Okay, price went below. So every time, okay, price goes below the moving average, you're looking for shorts. And vice versa. If price goes above the moving average, you're looking for longs. Okay, in general. Okay, you still have to understand, the market structure. You still have to understand when the market is ranging, when the market is about to reverse, but in general, you're looking for shorts when the market is below the moving average, and vice versa. You're looking for longs, okay, when the market is above the moving average. So we have the market below the moving average right here. We have resistance right here, okay. Now we want resistance to line up with the 20 moving average. So we have that right here. We have resistance lining up. Now notice how price comes near. Now when it comes to these moving average, price don't have to hit the moving average. As long as it comes near it, okay, 20 moving average right here, it comes near the moving average, line up with nice resistance right here. This could be a nice trade. So you can, okay, see this as soon as you see price rejection off of this, resistance, and it's close to the moving average, you can actually take a trade, and you can actually put your stop loss maybe a little bit above, the moving average right here, okay, and look for your quick reward. You can look for 1-to-1, 2-to-1, whatever the case is. But basically, that's the whole strategy right here. So let's go to another example. Okay, guys, so we have price above the 20 moving average. Okay, we have support. Well, this was resistance right here. Okay, that basically turned into support. So the market went up. This resistance actually turned into support right here. And we also have, okay, price near the 20 moving average. And that's what we want, guys. We want the combination of price action plus the moving average lining up together, okay? And then we're looking for a trade. So we have a nice rejections right here. And to me, these rejections are good enough to get in the market, okay? Put my stop loss a little bit below that moving average, and you look for your profits, okay? Now, let me show you guys another example. Okay, guys. Now, this is a 50 moving average. I told you guys in the beginning we're going to use the 20 or the 50. Okay, you can use both. We have here the market above the 50. We have, okay, support right here, and we're looking for price to come back to this area, and we're looking for price to line up, okay, right with the 50. So if you notice how price went below the moving average a little bit, okay, we don't care about that. As long as price snaps right back up, notice how price snapped right back up, we good, okay? We can go long right there. and we definitely will look for our profits. Nice little pop right here. Okay, so that's what we're looking at, and don't worry about if price, breaks it a little bit. As long as it snaps right back up, it lines up with support, you're good. Okay, so let me show you guys another example. Okay, now we are still using the 50 moving average. We have price above that 50 moving average. This time we are going to use supply and demand. Okay, so we're going to combine supply and demand with the 50 moving average. Okay, so now if you don't know what supply and demand is, it's basically aggressive buying and aggressive selling. Okay, I have a lot of videos on my channel about it. Now we have here, okay, we have demand right here. Okay, lining up right near that 50 moving average. Again, we have another demand area right here. Okay, and basically when you have demand or vice versa, supply line up with the 50 moving average and it comes right back to this moving average, okay, you can look for trades. And if you don't understand supply and demand, I do have a supply and demand indicator that will help you understand supply and demand. So let me turn on the indicator real quick. You can show demand when the market's going up, or you can show supply when the market's going down. So let me click on show demand, and you can have demand areas show up on your chart. Okay, so let me show you guys another example. Okay guys, here's another example right here. We have price below the 20 moving average. This is the 20 moving average right here. Okay, we have a nice supply level right here, and we have price coming back to the 20 moving average combined with supply and demand, and we have a nice trade right there. Okay, so again guys, when you combine price action with these moving averages, this is when you're actually going to take your trading to the next level. Stop relying just only on your indicators. You have to combine it with price action, right? So let me show you guys another example. Okay guys, now this example right here is actually combining the moving average with breakouts. So we have here the market in a strong trend. We need a strong trend when we trading these breakouts, and notice how price pulls right back to that 20 moving average, and it gives us a nice little breakout consolidation right here. We're looking to take that trade as soon as it breaks out to the top, right? Let me show you guys another example. Okay guys, so here is another example. Price is below the 50 moving average. It comes back to that 50 moving average. It gives us a nice little flag situation right here, right? And it breaks out of this to give us a nice trade to the downside. So that's what we're looking for. We're looking for, a nice consolidation right at that key moving average, the 50 or the 20, and we're looking for the breakout right here. Okay. Again, we have the market coming back to that 50. It's basically flagging out right here, and we're looking for that break to the downside so we can take that trade, right? And this works very good when the market is in a strong trend. Okay, so let me show you guys another example so we can wrap this up. Okay guys, again, the market is below the moving average, comes back to the 20. This is the 20 right here. Give us a nice little flag. We're waiting for price to come back to break these lows right here so we can trade. Guess what? It gave us another one. Okay, like I said, this works very good if the market is trending strong. Okay, we have a nice little consolidation break to the downside, and we're looking for profits. So guys, that's how you trade these moving averages. Okay, you combine it with price action. Please do not come in the market and think that you could just buy off these moving average and you don't understand price action. All right, hope you guys enjoyed this video. If you got some value out of this, make sure you hit that like button, make sure you hit that subscribe button, make sure you follow me on Instagram, make sure you join my free Telegram group, make sure you get my training program that will show you guys how to become a full-time trader, and you will get the supply and demand indicator for free when you join the program. Guys, make sure you share this video, make sure you watch more of my videos, and make sure you comment below because I try to answer all your guys' questions. All right, thanks a lot for your time, and please have a great day.